Hi, welcome back to Finally Revealed. In this episode, I want to talk about how to safeguard your business money. I have another video on protecting your bank account, and I received information from a friend about a situation at their company, and it reminded me that we need to also make sure that people in business are aware of these ways that they can be ripped off so it can be prevented. And I was an undergrad. We had one of our accounting professors taught us about how Muhammad Ali, just as an example, was ripped off by his business advisor, an accountant, and it was basically through a system of setting up dummy accounts. So just like he was telling us how that happens to avoid it, I'm telling you how it happens, not as a how-to for somebody who thinks they can take advantage, but for you to be aware as the employer or the business owner to not let this happen to you. The main reason that people, companies, individuals, whatever, get ripped off is because they are not paying attention to what's going on, either because they're busy or they think they have someone they trust who can handle it, or sometimes it's because they don't really understand the ways that they can be ripped off. And in a business setting, it's commonly referred to as embezzlement. So there are four main ways that someone in a company can rip off the company. And those are by creating dummy accounts so that the books and records show payables to made up vendors or made up expenses, and then it flows through into the normal accounting spreadsheets and the software, etc., except that those vendors aren't real, and they've either some people go to elaborate means and actually set up a fake company, well, a real company, and then have fake contracts with your company and pay the money out that way. Or they'll just write it to a fake company and then take it themselves and deposit it into their own bank account, which shouldn't happen but can happen. Another way is for the person who's in charge of payroll to issue themselves multiple extra paychecks beyond what they are supposed to do. And this can be found out by one situation we had with a client. The person who was sending it in, if you go with a payroll company and they have all of the information on taxes, they'll make the tax deposits for you sometimes if you want. They will track benefit payments. For example, if somebody's got an automatic deposit going to a savings account, or if they're paying for a stock option, if they're paying for life insurance or health insurance, sometimes the people are caught because they just are lazy themselves and fill out a number for an extra check for them. Well, the instructions to the payroll company include these other items. So when you have extra checks, you have extra insurance payments, extra tax payments, and somebody eventually says something's funky with your paperwork, and they're found out that way. The third way a company is ripped off is having cash lying around that's able to be taken. You know, there's no record with cash, and cash belongs to whoever's holding it. So that's going to be difficult to prove and recover. So do not have cash lying around. Oh, I misspoke. All right, dummy accounts, extra paycheck, cash. Number 4 is leaving the corporate checkbook around with or without a stamp of a signature. You don't want to leave that around for unauthorized people to use. If somebody is authorized to use a signature stamp, you need to have clear rules on it and have them be accountable as to when it's being used, where that stamp is being located, and keep it away from unauthorized people. And the final way that I'm including on this video, as far as the 5th way that a company can be ripped off, is when a person who has the ability to use funds of the company, either checks or other authorization to make transfers, buys assets in the name of the company that no one else knows about. They're the only people on the documentation, and then they later sell it or transfer it to another entity that they own or to themselves. So they're converting the cash or bank balance into a hard asset, real estate, a project, an investment, and then they're going to further transfer it the other way. Now, the best way, without getting nitpicky into each of these different examples, the best way to safeguard your money is, number one, maintain oversight over it. The party responsible, the owners, have the obligation to check their bank records, check the statements, be knowledgeable about what's going on, and actually put eyes to the paper. Do not delegate the license or ability of some employee to use the funds and then also have them be the one checking. That's not going to help you. It's not going to help you recover if you want to try to tell your bank that this person was unauthorized. It was an unauthorized signature. They didn't use a signature stamp. They signed their own name or they forged your name. If you're not checking, you're responsible. The next thing is, do not concentrate any type of authority like this in one person. It's just a recipe for disaster. It's too tempting, even for a person who's honest. If they come on hard times, who's otherwise honest, if they come on hard times, they get in some kind of a bind. Don't make it easy for people to be tempted. So what you want here is a different person writing the amounts out versus the person who's stuffing envelopes or making lists of what bills are being sent out versus a person who's receiving bills that are to be paid. The bigger you are, the more diverse this should be. There should be multiple people doing it so that it's easier to find out if something happened and it's harder for something to happen that's not authorized. The next thing is communicate with the people who are doing this. Be clear on what their authority is. Be clear on what they're supposed to be doing. Be clear that any information that is to come to you as owner, the statements and things need to come to you, not be filtered through someone else. There are instances where someone will get a bank statement, will get the copies, will manipulate the copies of the checks. The check might have been payable to them directly, but they manipulate the statement. Copiers are really good these days. They substitute it and then you get the statement. It's been opened and things have been altered and you don't even know. That envelope should be sealed. You should look at it and check it. And then finally, accountability. Okay, Business Boundaries 101. If someone does something inappropriate with your money, no matter how small, and you do nothing about it, you've just given them permission. It's almost like a dare. You're looking the other way. And not only with that person, everybody else who knows about it. So do not be your own worst enemy. Look out for these things. Set up systems. Don't be too busy. And be careful. Make it easy for everyone to be accountable and honest, and not easy for people to do the wrong thing. And if they do the wrong thing, punish them and make it known and step up your rules so that it doesn't happen again. Okay, I hope this was helpful. If you learned something today, give me a thumbs up, or if it was otherwise helpful. If you know someone who's just starting out in business, please share this with them. No matter how small it is, people get busy. They start thinking they want to hire someone to come in and help them, and there are people who are opportunists who will come in looking for this type of a situation, and we really want to help you avoid it. So subscribe to see our other videos, and please come back and see me next time. Thanks for watching.